एक इनकम टैक्स का इम्पोर्टेंट केस है जिसमें पार्टनर्स ने कैपिटल इंट्रोड्यूस किया, उस पर सेक्शन 68 लगा दिया था इनकम टैक्स डिपार्टमेंट में। चलिए केस क्या समझते हैं। ITO वर्सेस गुड फार्म रियरिंग। दिस केस इज प्रोनाउंस्ड ऑन the 1st April 2025 and the fact of the case is like Assess is a partnership firm and is doing the business of livestock and dairy farm, and there are the two partner. One is a Good Farm Healthcare LLP and second is a Relaunch Traders LLP. And the assessee filed during the assessment 1819 is a nil return. Then after the case was selected as a e-assessment scheme 2019 based on the share capital and other capital basis. And each partner contributed 8 crore rupees in the firm. During the assessment, AO issued 3 notices. Out of 3, 2 is to the assessee and 1 is the partner of the firm. On that, the assessee has furnished its partnership deed, audited financials, ITR, bank statements and ledger accounts of the partner to the response of show cause notice. And assessee submit that the capital was introduced by its partner through banking channel and supported by ledger account and the confirmation. However, AO held that the only Relaunch Traders Limited has responded to notice under section 133 subsection 6, but Healthcare is not respond anything. So based on that, AO has treated as a capital contribution of 8 CR by Good Farm Healthcare Limited as an unexplained cash credit and made addition under section 68 and taxing the same. Assessee has no choice. Assessee filed the appeal before the CIT and contend that he has duly discharged his initial burden cast upon section 68 of the Act by submitting identity of legal status of the partner, copy of their PAN, ITR, bank statement, ledger confirmations and ledger account, proof of trade through banking channel and audited financial statement to demonstrate the capital position of the partner. Assessee submitted the non-response by the Gulf Carfare LLP to the AO. Notice under section 133 of the Act was never communicated to the assessee and is not liable to for such third-party non-compliance. Moreover, additionally, also say that AO did not identify any defect, inconsistency, insufficiency in the document filed by the assessee. So now CITs agree with the assessee and held that the addition was based on merely a suspicious non-compliance under section 133 of subsection 6 and without bringing any adverse material on record to reboot the documents filed by the assessee. CIT has relied upon the several jurisdiction pronounced. One of these is a Pankaj Dye Stock Industry, which state that the capital introduced by the partner cannot be assessed as an unexplained income in the hands of the firm if the partner is a tax-paying entity. And accordingly, the CIT delayed the addition of 8 CR under section 68 of the Act. Now the Revenue Department also want to appeal the case of the CIT, and he agreed by the order of CIT appeal applied to the Appellate Tribunal. Raise a question on 3 points. During the course of hearing, Learned Department AO state that the finding record by the AO and the submitted there the creditworthiness of the partner Good Farm Healthcare LLP, which has introduced capital of 8 CR, was not established by the assessee. Additionally, in spite of the opportunity, the said partner failed to respond to the notice issued under section 130 subsection 6 and no explanation or supporting material was placed to demonstrate the source of such capital in the hands of the LLP. Therefore, addition made by the AO under section 68 was justified and should be sustainable. TR also placed the Honorable Rajasthan High Court in the Kailash Chandra Agarwal vs. ITO case, where it was held that the burden of proving the identity of the creditor, their creditworthiness, genuineness of the transaction rests with the assessee. Now the second party is the learned authorized representative of the assessee state that by denying that the addition made under section 68 of the Act respect of capital introduction by the partner is wholly misconceived. Here submit that the assessee as a partnership firm and amount of ACR received during under consideration of the represented capital contribution from its partner. Good Farm Healthcare LLP is a content that he said a capital was duly recorded in the books of account of the firm and received through proper banking channel. Now that the question of the genuineness and identity The AR state that where the identity of genuineness of the transaction and creditworthiness of the partner stand duly established. In the supporting of the contention, the rely was placed on the various judicial pronouncement. One of these CIT versus Pankaj Dash of Industry, and another is a PCIT versus Vaishnav Reforms and Solvex report at 2018. He had also submitted that the assessee has discharged its initial honors cast under Section 68 by furnishing the complete particulars and supporting document evidence. Considering this material and the recording of factual finding under para 6.3 of the appellate order, rightly related under addition, and also submit that once the primary honors is discharged by the assessee, the burden shifts on the revenue to prove otherwise. This will not be done in the present case. Additionally, he also placed that the record in the audited financial statement of the goods firm, Calc LLP, which clearly indicate that the fund invested in the assessee of the firm, which was borrowed from the holding company of the said lender. The appellate tribunal has carefully considering the revival submission of both the parties and the pursuit of the order of the lower authority, along with the supporting the issue respect of the addition of 8 CR made under Section 68 of Income Tax Act 1961 being capital contribution by the one of the partner, namely Good Farm Calc LLP, which was deleted by CIT. The appellate tribunal state that the assessee's legal position in the forfeited by the several judicial pronouncement, including the CIT Pankaj Dash of Industry Supra, where it was held that once the partner is identifiable, capital is recorded through proper banking channel, and no additional Section 68 can be made in the hands of the firm if there is no evidence that amount is being firm's undisclosed income. Similarly, PCIT, Vaishnav Devi Reforms and the Solvex Sapra is a Honorable Gujarat High Court state that upheld that once the capital is confirmed by the partner and his source is explained in the partner's books, the addition cannot be made in the hands of the firm. It also states that revenue special leave petition case of PCIT, Vaishnav Devi Reforms and the Solvex is dismissed, and also rely upon the judgment of the Honorable High Court of Rajasthan in case of Kailash Chandra Agarwal vs. ITO. It states that the firm has established identity, genuineness and creditworthiness of the capital introduced. However, this judgment is distinguishable on the fact and the present case all the three components have been duly established. No material was proved by AO is indicate or otherwise, and based on appellate tribunal dismissed the appeal of the revenue. If you feel that this is a video is helpful to you, please subscribe and like this video. Thank you for watching this.